everyone. Welcome to Beer Cake. I'm your host, JJ Co. You can stream Beer Cake Podcast on Anchor.fm and Spotify. I'm still pending on other streaming services. I'm still waiting. And you could also follow the podcast on social media, Facebook, Instagram, Twitter, and at Beer Cake Podcast. Okay, so today we have an interesting episode, actually. And my guest today is Stephen Lee. He is a financial analyst with over 20 years of experience in the industry. And today we're going to talk about GameStop.
Hi
Um,
everyone, how you guys doing? Hi JJ, good seeing you.
Hi, good to see you. Yeah. So it's an interesting event. So I kind of wanted to talk about this um, because I think the what happened to GameStop in the past couple of weeks, especially the last week of January, um, I not only is it interesting from a financial perspective, but I think also culturally and politically, and so there's sort of many aspects to this. So I thought maybe we'd look at it from all those aspects, but maybe look at it from the financial aspect first, and maybe set some definitions as well for those who are listening who are not familiar with trading and the financial sector, and especially the stock market, how that all works. So, yeah, we can get started. So, I think I think everybody probably has heard something because it was all over the news and all over social media. Um, the GameStop stock um, rose had a crazy rise from particularly on January 25th, Monday, January 25th, and I think it hit the high on January. Actually, I have this
January
chart.
28th.
January 28th, actually pre-market January 28th, it went as high as $513. I think during the market hours, it went as high as like 470, 480, or something like that.
Yep.
And then of course there were crazy things that happened. In the midst of that, Robinhood, the online trading platform, decided to uh, restrict traders from buying. So we could
Fine.
go over all of that stuff.
Sure.
So, and then now, in the following week, the week of February 1st, it just kept tanking. I mean, I think that story is kind of over. Who knows? Maybe next week there'll be another spike. I don't know. But yeah, but that's basically what happened. So let's talk about like who are the players, who's driving the stock prices, why did it go up, and why was there all this confusion and controversy around trading restrictions and all that.
Okay. So let
Yeah.
me just start give a background on GameStop, right? So for those who doesn't know what GameStop is, it's a video game retailer that buy and sell video games, console, and stuff like that. And then for a long time, people would think that GameStop is going to die because no one goes to a store to buy stuff, especially after COVID, right? There's no one going to the store, everything's done online. So there has been a very negative thesis in the company where they're, hey, no, eventually go to zero because it won't exist anymore, right? And the interesting thing that happened is that started, I think, around summertime of last year. Ryan Cohen, which is the founder of Chewy, bought a stake in the company, and so, but the stock didn't really move. It moved a little bit, but it's not like crazy, right? But went from single digit to like double digit, right? And had to keep buying stocks here. And so, what happened is that in Wall Street, there is something called short selling, right? So that it basically for hedge funds, what they can do is they can bet a stock going down by basically selling shares that they do not own and hope for the stock price would drop and then just buy it back at a lower price. I mean, I think in this case on GameStop, people think it's going to zero, right? And then there's a lot of cases of stock, people shorting it, right? And we can go into discussion about this being patriotic, I mean, non patriotic, whatever it is. But to me, it's just is a mechanism available in the market that allow you to make money, right? Just so you're buying something and sell high, you want to sell high and buy low, right? The same logic.
Yeah, I do want to point out that it's perfectly legal, and it's a perfectly normal in the course of trading, stock trading, buying and selling, to actually do that. And actually, I was listening to a lot of different news around this and people talking about the different aspects of it. And sometimes the short selling or shorting a stock, that mechanism serves a purpose sometimes, especially if a particular stock is overinflated and for whatever reason. And so shorting a stock sometimes drives the price down to what its true valuation is. And
Yep.
so yeah, it can be a very useful mechanism.
Yeah, and the fact is, I mean, I think one argument that I think is very valid is a short seller, their work has to be much better because when you buy a stock long, whatever you put in as cash, you lose zero, you lose it all. But in the case of seeing GameStop, the loss could be infinite. You can put in $100, it goes up 10 times, you lose $1,000, right? So,
Yeah.
so I mean, one argument is that the short seller who does work on the company, they're not just doing for the sake of because they know it's fun. They should do a lot of work and they have a strong thesis because they know that the risk reward is against them. It's just going to casino. Your odds against you, so you better be really sure of what you're doing before you actually make a trade. So yeah, like you say, it's perfectly legal, has been done, and it's basically in this hedge fund industry, right? Because it's basically to reduce the volatility of a fund where you're a long bunch of stock and you want to short something to balance it so that in the long run, you can avoid the volatility in the market so that you can balance out a fund. That's just basically why people do it, right?
Wait,
Uh,
okay, so just to clarify, you're saying that traders will short stocks to help balance the
yeah,
volatility?
yeah.
Okay.
So for example, right? So like for a typical person to buy, they just buy stock, right? Market goes up, they go up, goes down, it goes down, right? And so there are hedge funds. This industry started in this in the 60s, 70s, where you basically buy undervalued stock that you think will go up, and you want to short stock that you think is overvalued that will go down. So that way, so you become somewhat disconnect with the market movement, right? Because
I
market
see.
go up, it will go up, but then your short in theory should go up less, and then market go down, your long will go down, but your short will go down more. So that actually create less volatility in the portfolio. That is the idea. That is the goal.
That's the idea, and it's the hedge funds that serve that purpose. Is that what you're saying?
Yes, because you have to be especially registered funded to be able to do this, right? Is it's not anybody who can just go in and then just short stocks. I mean, actually, let's take it back. Like anybody can go short stock, but you got to sign certain agreement with the brokerage firm in order to short stock, and then it became like a professional game where people go long and short stock because it does take a lot of work than just buying hey Apple and just hold it for 20 years and just forget about it, right?
So yeah, because I was also a little unclear in terms of what exactly are hedge funds. I mean, um, they're not necessarily fund managers like mutual fund managers
Oh, they
or
are. They
like,
are.
oh,
They are.
okay, so they
Yeah.
do
So
manage. Okay.
they do manage fund. Yeah. So the only difference is that instead of just buying long, they would short stocks. So that by different hedge fund hedging against your long portfolio. So that I mean, ideally is you want to make money on both sides, right? Make money on the long and then on the shorts. But the idea also factor is if there's some market volatility, right, that you can create an exposure where you can protect your capital during market volatility, right? I mean, there are certain funds called market neutral fund, where let's say if you're long $1,000 of stock, you will short $1,000 stock. So your net, your exposure is zero, right? As opposed to you have $1,000, you put everything in there, your exposure is 100%, right?
It's like that's kind of like betting on both black and red on the roulette.
Basically. But then there's still chance you will lose, but you can get zero and double zero, right? Right. So it's not zero risk game, as you can tell what happened
Yeah.
with GameStop, right? So sometimes you hit zero and double zero, and you would just be in a lot of trouble.
Yeah.
That's because
Yeah.
you lose everything, right?
Yeah. Yeah. Wait, okay. Yeah, okay. So you're not necessarily betting uh long and short on the same stock.
Exactly. Yeah. So
Okay,
for
got it.
example, right? Yeah. So for example, right? So let's say I like Apple a lot, so I'm long Apple, right?
Yeah.
But then I know a certain stock that will move with Apple, but then is a undervalued company. So one trade and say, well, I think Apple's doing great. They will take over BlackBerry in the future. So years ago, I could be long Apple and short BlackBerry. Both are technology stocks in the same sector. But then I know that Apple will do much better than BlackBerry. And so that's how you can hedge it. And if the market go down, both will go down. But I think BlackBerry in the long will go down more. I mean, that's an example.
Yeah, that's right. And just to define, long just means that you're buying stock at lower price, hoping it will go up, and you're
Yep.
selling it after it goes up.
Yep.
Shorting is you're actually buying or selling the stock that you actually don't have. So essentially, you're borrowing stock from market makers or somewhere, or
Yeah.
yeah,
So one way this go to the whole controversy, right? So there obviously a lot of people own the stock, right? And the way it works is these stock can be loaned to different brokers to enable short seller to then use those shares to sell what they don't have because they have to borrow it, right?
yeah.
And one thing that's interesting with GameStop is that according to data, the amount that's shorted is more than the amount of shares exist.
That's right,
That
and
which
that's
which which is unusual and it shouldn't happen, but it did.
it did because I understand that uh, people could actually the way it's set up, you could actually like the same number of shares can be shorted multiple times or something like that.
Yeah, but in theory, it shouldn't happen, right?
It
That
shouldn't
is
happen,
just
but
yeah.
technically it can happen, and which is what
I
happened.
mean, and it definitely did, right?
Yeah.
So
So there's a couple of controversy around the GameStop then. One, it was shorted. The short position that hedge funds took exceeded the number of shares that actually existed, which
mhm,
is a huge red flag, right?
mhm.
And the other one is that at the time, I think hedge funds took these short positions. The stock was not necessarily overvalued or inflated because it was in the single digit prices.
Yes,
Yeah.
it's the fact that they think that this company is going away and it's going to zero,
Right,
right?
and that's the assumption that they were making, right?
Yes,
And at
yeah.
the end of 2020, what's his name? Something Ryan.
Ryan Cohen,
Ryan
the
Cohen.
Twitter founder, yeah.
Yeah, Ryan Cohen actually injected like 76 million or something like that into the company, buying like 9 million shares or something.
Yeah,
Um,
so it happened over time. So it started in the
yeah,
summer, it started with like a 5 million share position, and
I
over
see.
time he built it up. And so I think the most recent one was in January, right? So no one people pay attention to it and stop it moving up a little bit here and there, but it's not it didn't really get into this craziness until January. And basically by the time you get to like 13% shares of the company, he wanted to be on the board, he wanted to make changes. I guess always he's think he see value in the company, he think and turn around. And going to the background then is that this stock has been there's one person or a lot of people pushing the stock starting in the summertime in
Mm-hmm.
Wall Street Bets, right? So to me, Wall Street Bet is I guess today's versus 2000s chat room, right? People just putting idea in there, people follow and stuff like that.
Yeah.
And I think,
So Wall Street Bets is actually a subreddit group.
yeah,
Yeah.
exactly.
So
And so people are following, and then there is this one particular person, is deep value at value,
no, you could
and
say a deep fucking value. And the person
okay,
behind that is Keith Gill. He lives
yes,
in Boston or near Boston,
in the Chisel,
Massachusetts.
right?
Yeah.
And so from what I can read, he worked for Mass Mutual until he resigned, I think late January when he started making his millions and sort of the trade. So I think he took a position where he bought, I think 1,000 April 12 and a half calls for like, I don't know, 30 cents. And then I think he bought 50,000 shares at like $14. So he basically, I think, put in about somewhere under 1 million. And at the peak, that 1 million was worth 50 something.
Something, yeah, it was
Yeah,
definitely double digit millions. Yeah.
yeah, and so in the process, he did cash out. I mean, I was looking on the Reddit, and he did sell 500, so half of his call option, and cash out like 13 million. So he's obviously in the money. He made at least 10 times his money. The rest is just riding on the profit and stuff like that. And but then I just want to talk to them. There's more of a cultural thing where YOLO, right? You only live once. This mentality where I'm going to put in. And then to me it feel like a casino mentality. Just bet it all. If I win, I win big. If I lose, I go home.
Hmm.
That is not investing, but we can talk about that later, right? And so people follow this guy and I'm reading the chat. It's like if he's holding, I'm holding my shares, and so that's I think where it got crazy, and then buying begets buying because to be honest, how it all started is that it's what we call short squeeze, right? Where basically people are short these stocks, and then as a risk management for hedge fund, when stocks are going up and going against you, you may want to reduce the position. And so in order to reduce the short position, you have to buy the shares. So that buying begets more buying. And also over time, the fact is when the start going up like this, the amount of shares available to borrow gets hard, or the cost to borrow the shares is much higher because there's a cost to borrow stock. It's not like, oh, I can borrow shares and just short it. There's a fee that you have to pay to borrow the stock. Normally, on a very high traded stock, it's only like 1%, 2%. But on GameStop, I think at the point it gets you like hundreds of percent. So it doesn't
Wow.
make sense to even short the stock. It's like I'll just lose money just shorting, period, right?
Yeah. Yeah.
So therefore they have to start covering, and so that creates artificial volume of buying. So then this actually going to the merits of short seller in the sense that is these shares that they borrow have to be bought back at some point. So therefore, if a stock goes down a lot, these short settlement actually artificially support the stock as they're buying the stock back if they're not assuming it is zero, right? So there is that merit on short seller because those shares need to be bought back. But then I'm going back to the GameStop. So they just create short squeeze, and because the losses are infinite, right? It's not like it goes up unless you cover it. Um, so therefore, that's why you see Melvin Capital, which is like the main headline, asking I think Citadel and also SAC, I guess point 72 for capital infusion. Because if you have $100 that you short, you went up 5 times, you lose $500. There's a hole there. You will have to pluck either capital to fill that hole or sell your long position to raise cash to sell that hole, to plug that hole. So in a way, you see it to kind of why the market went down the last week of January. Because as this going crazy, funds have to raise capital to plug that hole that they have as a result of the short selling that they look of the losses. So you create this market mechanism that just bring down the market just because of what happened.
So the market did go down. You know what? Actually, that's the one thing I didn't really pay attention to. If the entire market went down, so the entire market did go down a bit.
Yeah, so I think in the last week of January, I think it went down 4%, I think,
Four
on the
percent.
S. Yeah, so yeah, it doesn't sound like a lot, but 4% is a lot, right? So
It
S&P
is
went
a
down
lot,
like four,
actually.
yeah, 4.5% in 1 week. Yeah,
Yeah, that is significant, actually.
yeah,
Yeah, and also there were reports of like towards the end of that week and maybe the early following week, there were articles about in one particular article, Goldman was warning like if this sort of short squeeze continues, then the market can crash, and there were all these sort of ominous kind of like this can't continue, otherwise we'll be in big financial trouble kind of warnings, but I don't
yeah,
know how realistic that was, if it was.
because actually the truth is then it tied back to Robinhood and all these broker, right?
Yeah.
There was almost a financial accident that happens in the market. Now, so I understand people upset. Oh, Robinhood shut down people from buying stock on that one day, and then slowly unrestrict them only by one share, and then now I think as of last Friday, they're free to trade stock again. And the reason why they did that is because Robinhood ran out of capital.
Yeah.
And so basically, Robinhood almost went under. Basically, that's what happened. I don't think people realize it. They're just upset that, oh, we got to investigate why can't Robinhood do that. Oh, they might be because they are basically because Citadel is paying them for order flow. They're doing them as a favor. All this conspiracy theory happening.
Well,
But that
I think to be fair, though, I think what people are upset about is the fact that they only restricted buying and not the selling. So if they had restricted both buying and selling, it would have stood where it stood, and restricted all activity regarding GameStop and other meme stocks, as they're called. Um, but they didn't do that. They only restricted buying of the stock, which then prevented all these Reddit traders from uh, maintaining a certain price level, but also allowing hedge funds and people who are shorting the stock to be able to sell off their shares at a lower price. Yeah.
Yeah, but see, there's a reason why they did that though, right? Because selling actually reduce the capital needs, because when Robinhood, right? So basically, Robinhood is the way if you look at this, all brokers they don't charge you commission. In the old day, they charge you hundreds of dollars just to do one trade. Now, and over time, it's like $15, $12, $5. Now it's zero, right? The brokers need to make money somehow, and the brokers in the industry, Wall Street industry, how they make money is by selling your order flow. Forget about Robinhood, Charles Schwab, E-Trade, American,
They all do
all of
it.
them, that they all do it because that's a way for them to make money, right? So they will sell all the aggregate order flow of the firm, Citadel, whoever it is, right? And they'll get revenue from it. And so in this case, Robinhood, because they want self clearing, they clear their own trades, so they have to put up capital with DTCC to make sure the trade is done, and also because they're self clear. There's a brokerage firm. We don't know how many people in Robinhood buy stock on margin. So let's talk about margin, right? So basically, if you open a brokerage account and you sign a margin agreement, you can actually borrow money against your stock and buy more. So typical margin requirement is 50% on the regular stock. So you put in $100, you can buy $150 worth of stock. But then at the end, if you lose money, you could be negative 50 if everything goes zero, right? So you owe the broker $50. And so now you have all these meme stock going up like crazy, up and down like crazy, right? Now I don't know, I don't have the statistic of how many people buy on margin on GameStop and all these stock. I'm sure there are people. And so if you're a broker, you see that happen like the day before Robinhood shut down. E-Trade, Ameritrade, all those guys, they changed the margin requirement, meaning you can only buy less of the stock. They didn't stop you from buying it, but they are restricting people buying how much they can buy versus previously. But in Robinhood's case, they shut down the buying because they have to meet the capital requirement to do this. You can see them, they raised I think $3.5 billion within 2 days. That's how why the trading restriction got eased. Because selling, you're taking cash in, right? So that reduces their liability. And if you have a margin account, that reduces the risk of people couldn't put up margin to fill that gap. Let's say you buy, but it's like a 500. You've been lucky, under 350. Guess what? You're down 150. It could be down more than what you owe in your account. What happens if you can't collect that money from the customer? Robinhood have to eat it,
Mm-hmm.
right? So therefore, that's why it happened. I understand nobody cares because all they know is that I cannot buy it. But there is almost a financial accident that almost happened where if Robinhood goes down, it will create a cascading effect. We don't know how big it is. The problem with Wall Street and leverage is that something bad happened. Maybe it's just one event and that's it, or it could cascade and then be a domino and just get bigger and bigger and bigger. And that's actually what happened with the housing crisis, right?
Yes, yes.
Right?
And Wall Street still has not learned the lesson. They're over leverage everything.
Well, I mean, to be fair, right? Now, I'm not being performed Wall Street, right? All the banks today is much more well capitalized than it was in '08. People still play leverage. That is the way it is. We all play leverage, right? But they minimize the risk they take, right? And the funny thing, right? You see with internet brokers or Robinhood, they go and talk. Yeah, I'm doing this to protect the customer. That's BS. They're protecting themselves, but they have to say that, right? But in a way, it's true because if they can't protect themselves, the customer lose, right?
Yeah.
Because they'll go away. Because this one, I forgot who it was. I think it was the Interactive Broker CEO. Because I think the CNN or someone asked, "Are you doing this to protect the customer?" It's like, I'm protecting this to protect myself. No, I mean for the customer. Like he even said it, say himself first, the firm first, then customer. But it's true, right? Because if the firm goes under, what good does it for the customers out there, right?
That's true. So let's say the scenario played out very differently and Robinhood was not able to stop the bleeding soon enough and they eventually went under. Then what
Mhm.
would have happened to all of their customers?
Well,
Right?
first of all, they can't take money out. They're stuck,
Right.
right? So I'll give you an example, right? So there was a financial accident that happened, I think, in 2000 and I can't remember. I think 2010 or 11 in the foreign exchange market. Because I remember vividly, because we owned that stock of that broker. All right. So I think it was Swiss franc being devalued overnight, right? And so the first day the stock trade went down, no one ever know why, and eventually that stock went to zero. Because what happened is that, and in foreign exchange is even worse. You can leverage as a customer, as a retail, 100 times to one your capital. Because foreign exchange normally does not move more than 0.5%, 1%, but
Yeah.
it was like a massive, like 3, 4, 5 cent deviation move, and so a lot of people, customer who bet against the move, don't have enough capital to plug the hole. A lot of them went like negative 2, 3, 400,000, and so what happened? Well, you still have to hold the customer who have the asset whole, right? Make them whole, but you have all this negative here. So the firm ran out of money and you went under, and so end up Jeffries have come in and bailed them out. So, but at least for a period of time, you're stuck. Like you can't take money out because you're stuck, right? And so if Robinhood goes under, the customer is stuck. Hopefully, someone will bail them out. I'm not sure who, right? Eventually, right? Because there are people who invest in Robinhood don't want to go under, right? And the fact that they want to go IPO and make money and stuff like that. But also the fact is you don't know what is a cascading effect. If Robinhood cannot, because each side there's a buy and sell on each trade, right? And you settle it. If Robinhood go under, he cannot meet the commitment to the other side. The domino effect and hurt Charles Robert E. Trade. And if they don't have enough capital, then it's like the cascading effect happens. So luckily, nothing happened. The market roared back the next week because everything's fixed. Robinhood got capital, everything is fine. But sometimes this kind of things you just don't know,
Hmm.
like how it happened. But it could be accessory where, and the fact is, if this meme stuff, for example, keep going higher, it will force a lot of the hedge fund to sell their long to raise capital, and hence, and the funny thing is, I know how buying begets buying, selling begets selling,
Yes.
and as the market goes down, everyone have to sell now because the market is now turning, and then it's all everything is tied with the foreign currency volatility, and you create all these other pool of capital need to react as a result, and you just snowball into something that we don't know. That's what happened.
Yeah. So we did potentially avoid or dodge that bullet that
For now,
could
yes,
have been catastrophic. Who
yes,
knows? It's a
yes,
complete unknown at this point because we don't
yeah,
know exactly what would have happened.
yeah.
Um, and for now, I think um, there was a couple of things. So just a couple of notes about Robinhood. I actually do have a Robinhood account, so I could give some details in terms of like how that works. So Robinhood accounts, you do have the option of opening a cash account or a margin account, and to open a margin account is very easy, and on Robinhood, at least like if you're account balance, I'm not sure if the margin ratio changes if your account balance is like 25,000 and above, but I would guess that most of the people on Reddit who participate in this GameStop stock surge uh, did not have that much in their account. These are probably people who have 500,000 or whatever.
But
Um,
on that note, though, but the thing is that, right, the one thing we didn't touch on is that
yeah.
a lot of these small investors, they don't buy the stock, they buy the option of the stock. And
It
that create a leverage effect on the on
I
that's
see what you mean. Yes. Okay. Yes. Yes. I'm not. I'm still not exactly comfortable in explaining what options are, but no. I mean. I understand that. Yeah. Um. That's interesting. So are you saying that most of the people who sort of contributed to the price surge, um, bought options, and so not necessarily actually bought equity?
yeah. So let me just explain option. So option is basically by the name itself is an option, right? So option, there's what you call a call or a put option. A call is expect the stock to go up. A put is expect the stock to go down. Where let's say for GameStop, right? I bought a $10 call, so I have the right to buy the stock at $10 if I choose to exercise the call option. Buying a put option at $10 means that I have the right to sell the stock at $10 if I choose to exercise the option. And so what happened, there is a trend. It started in 2000 already, right? I mean, 2020 already, during COVID. A lot of smaller investors are buying out of the money calls and made a lot of money because the stock, whether it's Tesla, Etsy, Peloton, Zoom, all these names just go up double, triple, whatever. You don't normally see stock go up that much, right? I mean, just to put in the game sort of thing, on a stock market, on average, historically, should only go up. I mean, on average, goes up 8 to 12% a year. That's the average return for equity. Stock, if you want to run stock, goes higher, right? But to have a stock go up on Tesla, go up, right? Elon Musk, often from number 10 to number one of the world's wealthiest person overnight on 1 year because Tesla went up.
Yeah.
That is unheard of, right? I'm not saying Tesla is bad. It's a great company, it's a great car, all this stuff. But these are things that I never seen, right, in 20 years that this happens, right? Short squeeze I've seen, not to this magnitude, but it's like a market going up like this is just because there's so much money out there. But let's go back to option, right? So by buying call option, they give you a right to buy the stock. So like for example, like how the fucking value made so much money because he bought the April 12 and a half calls, I think, at 40 cents. They at the peak at 500. These options were $485. That's how he turned 20,000 into whatever 30 million.
Mm.
So you just think about it. You have $500. Some people could have turned the $500 into, I don't know, $1 million if they bought it early on, right? And so, but the way we work is with option. There's a buyer and a seller as well, right? So you buy the option. Most likely is a dealer who sell you the option. And so for the dealer, they want to hedge their risk. They have to buy the stocks in case the stock goes up, right?
Okay.
Right. So as the stock become more and more in the money, because basically it's not a one-to-one correlation, right? Because let's say if I buy a a call option, so let's say GameStop is a $10. If I buy a $5 option, every point move will correlate to the price going up. But let's say if I buy the $10 call and the stock's at five, even if the stock goes up $1, my option won't go up in one because I'm not what you call in the money, right? Because the stock price is still lower than where I could bought. But as the price goes up, the dealer have to buy more stock to basically hedge themselves against the risk. And so what happened is that as stock going higher, the dealer have to buy more stock to make sure they don't risk the capital as well. At the end, it's capitalism. I'm trying to protect myself. I don't want to get screwed, and that's all it is, right? So there's nothing wrong with that. That's the way it works. And so all these people buying out the money calls who made a lot of money, that's another form of buying that created in the GameStop because the dealer have to buy the stock so that to protect themselves from losing money. on these options that they have, because it's a zero sum game. Whoever make $1 on the option, someone lose $1. That's always how it happened with option. I mean, unlike stock, because if you own the stock, all it is, you just sold it lower than where it went, but you still sold it, right? But with option, doesn't work that way. It's a zero sum game.
Yeah. Yeah. Options a little tricky. I did remember buying a couple of options. This is back in 2020, just to sort of learn how that works. I bought one option. It was like um, 1 cent a share. So I bought and options you would buy in chunks of hundreds, in multiples of hundreds, right? So I
Yeah.
bought 100 shares, a penny a share option for $1. And a few
Mhm.
days later, it went up to $4, and so I sold it, and I made
Yeah.
$3.
Exactly. So imagine, right?
Yeah,
Instead of $1 you put in, you put $1,000. You just made, right, three
but I
grand.
but I have to say though, I have no idea why it went up, because when you're buying equity shares, you could see the stock prices chart, and when it goes up, and let's say it goes from $10 to $11, you know what that is, right? Because you could
Hmm.
see it in the chart, and you know that it's $1 profit you're gonna make. But
Hmm.
options, I still don't really know how that works. Because like you said, like just because the stock prices go up does not necessarily mean the option prices go up.
Yeah. Well, I mean, there is a correlation, right?
There's
So
a
an
correlation,
option,
but it's not. Yeah.
yeah. So because option, there are different components. The option, there is the time component, because it could expire at some point in the future. There is a volatility component, and there is the price of the underlying asset component, right? And so time, as you get close to expiration, it will decay. It will take the value out,
Yeah.
right? And the price underlying side, if that goes up, your option should go up in value on that component, right? And the last part is the volatility. So one of the reasons why the option makes so much money for a lot of people is because volatility on these stocks just blows up, and so the price of the option went up. Even if the stock goes nowhere, your option value goes up because people expect the move on the security is going to be much higher than normal. So they have to put that into the price of the option, just because it might just move like crazy and you'll be, make money as a result.
Huh. Oh,
Yeah.
that's
So,
interesting.
yeah. So I could give you an example. I didn't like I'll tell you, like I tried to short GameStop at, I think, it was 350, right? Obviously, I can't borrow shares, and I look at the GameStop option. It makes no sense because the pricing makes no sense to me. So I actually did a roundabout way shorting it by shorting the retail ETF, the XRT. Basically, because GameStop is one of the components, because it gone up so much, it become 20% of that ETF. And so what I did was I bought a put option on the XRT. Now, and during the day, I was looking at the option. My option value went up, even though the XRT didn't move, actually went higher. So in theory, I should lose money, but GameStop and still went higher. But I actually made money on the option that day because the volatility of XRT went up, because GameStop is getting more volatile. So XRT become volatile. So I actually made money as a result of it, not because the stock went in my favor. It's because the option component of the volatility went up. So there's a lot of trick to it. It's not like, oh, you just buy an option. If a stock goes up, you make money. Sometimes, like for example, I tell you that, like GameStop, have you bought the put option at the high? It's now 60. The stock went down 80%. Your option probably went up maybe 50%. You make less than the move of the stock. And options supposed to multiply the effect of the stock, because the volatility components just collapse and you lose money on that side of the option value. So I think for people just plain buying options just for that is actually more complicated, than what it looks like. So
Yeah, and it's complicated. It's not as straightforward, and you could potentially lose. Uh, it's I think
money
it's
really fast
easier.
too.
Yeah, it's easier to lose money faster, fast than buying equity. Um,
Yes,
yeah,
because
and go
because
ahead.
because option can go 0 to 0 very fast. Because if your option at expiration, you're not in the money. It's zero,
Yeah.
right?
Yeah.
But then on stock, rarely it goes to zero that fast, right? If it does, right?
Yeah. If it does at all. I mean, if I mean, it could potentially go to zero if the company basically fails, right, and
Yeah,
goes
exactly.
bankrupt. Okay,
Yeah,
then it goes to zero. Otherwise, as long as it's still there,
it's still there.
it
There's
might,
hope.
right, it might.
Just like GameStop. We had it the whole time. You made a lot of money, right? It's like there's hope.
Yeah. Actually, I think it went to an all-time low. I charted this. Wait, hold on a second. Let me look at it. It went to an all-time low of $2.57 in April 3rd of 2020. I mean, but granted, that was like shortly after the whole lockdown pandemic started.
Yeah.
So the entire stock market actually tanked mid-March through April. And then I guess like maybe late April or May, that's when it started going back up. But so going back to what happened at the end of January. So all the Reddit people on Reddit, a good number of them were Robinhood account holders, and Robinhood actually uh, account opening on Robinhood actually soared during the pandemic. And so you have uh, lots of people on that platform to begin with. And I would say probably a good majority of them don't really know how the stock market works, all the intricacies of it, and certainly not how options work. I don't know. I'm just guessing, maybe. I have no stats or
Mhm.
no facts to back this up, but I'm just guessing. Like, these are novice traders, novice investors, because I think actual investors would not use a platform like Robinhood.
Uh, I have no idea, right? Because now
Yeah.
I think Robin Hood, and then this goes to the social democratization of trading and stuff like that, right? So I think obviously Robin did a good job where I think part of the boom to start with Robin Hood is that it's the stimulus check that went out during COVID, right? A lot of people don't really need the money; they still got it, and so they figure, I want to put the money in the market, and then make money. And lo and behold, the market just go up, 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 and up. So these people just start making a lot of money, and then they just keep trading it. And I think now I never used the platform before, but from what I can read and tell is that it's like playing a game. It's like you'll get like confetti, you do a trade or something. I don't know if it's true or not. You can tell me. And so you make looks like a game, right? And so you can argue stock market is a game or not, right? You can argue that, right? And
Yeah.
so it got people hooked on it. It's just like social media, right? You get hooked on doing this, and then you can argue stock market investing, speculating. Investing is investing. Speculating is like gambling to a degree. Like you're just betting red or black, right? Whatever, right? And you got people hooked on using it. And so I think it's an easy platform for people to use. I think people like it. Obviously, they don't like the fact that they got restricted buying stocks, but the overall the platform was successful just because is some people like the I guess what's the word, the front end of it, like
Yeah,
the
the interface,
the
the
interface,
user,
exactly.
yeah,
Yeah,
the user interface. Yeah, it is extremely user friendly.
yeah.
Yeah, I don't know if it's something you could get. I think just the fact that it is so user friendly makes it easier for people to get hooked on it, maybe. But I don't know. I personally don't think they necessarily created mechanisms where they hook you like social media hooks you. The algorithm behind like Facebook, particularly Facebook, where it shows you stuff on your stream, things that will trigger certain responses and stuff. I don't think Robinhood necessarily does that.
Hmm.
But I think just the fact that it is extremely user friendly and the interface, it's very pretty too,
Hmm. That's how you get you hooked, right? And you won't go
I
back to and
guess
the fact
so.
and the fact just think about it, right? And the fact that you're making money doing that. Oh, this is great. This is fun, right? It's becoming like a game. And so it kind of desensitized that, oh, it's money also, right? That you're dealing with it. I mean, obviously these are debates that we can argue back and forth, whatever. But then it go back to the subculture, right? Is retail investor coming back? Well, for a long time, right? Wall Street would say we love to see retail come back. We love to see retail come back because, and why? Because that's how they make money, right? Because by retail investors coming back, that means more money coming in, market go up. With retail coming back, there's more shares traded, more money for them. So that's why Wall Street loves retail until it bite them in the ass,
Yes,
right?
and I will say this also, in the within the industry, retail investors and retail traders, people who don't know what they're doing, they're actually referred to as dumb money, uh,
Yeah.
because yeah, because we don't know what we're doing, so we'll actually buy in and sell, and our timing is like all wrong. We end up, and the market makers, especially if you're trying to day trade, market makers will totally fuck you up actually.
Mhm.
But anyway,
But the iron effect is that the dumb money
yeah,
is not so dumb anymore, right? Is that the one thing that I observed in the
yes
past few
and
years
no,
that,
yeah,
well, I mean, there'll always be dumb money, right? And there's dumb money and smart money too, right? So let's just not do that. But I think as a collective, right,
yeah,
that the retail investor cohort has done a fairly good job, not only timing the market, but also picking the stock that they like,
yeah,
right? And so now we will know probably 10, 20 years from now whether that is the case or just because the fact the market is going up because all the Fed liquidity coming in, right? Because basically whatever you buy, you make money anyways nowadays, right? It doesn't really matter in theory. But from my sense, I think retail investors doing a better job, and I think part of it is also is because the access to data is much more prevalent today than it was even 5 years ago, right? And
yeah,
so, I think that makes a difference because at the end, investing, stock picking is just a probability game based on information. And the more information, you can make a much better judgment and therefore improve your probability of making the right decision. And so in the old days, retail have no access to these information. Now everybody have access to information to a degree. I mean, most of it, right?
there's actually a lot of free market data and stock data services that you can get quite detailed information about each company, and and how the not just stock prices, but also uh, you know, debt ratios and capitalization, and all these things. You could even like on E Trade, actually also on Google or Yahoo Finance or one of those. You could even get earning schedules, and there's so much information that you could access. And I think that you're right. I think that's a huge component as to like how and why all this retail money is coming in, is because data is accessible.
Yep.
Yeah.
Yeah. I mean, and at the end, right? Nobody know. To be honest, if anyone can tell you that, oh, I know where the stock's going, that's just BS, right? It's a probability game where you want to risk your. At the end, it's risk, right? Stock market is not a guarantee, right? And it's a risk, and you want to make the decision based on the best probability, based on your assumption, right? That's all it is, right? And so by having more data, it improves your probability outlook and your future forecasts. So I think part of it is the fact that, and the fact that the new wave of investor are the younger generation, right? They know how to use the internet better than any of us, right? It's just second nature to them, so they can find all this data, and so therefore I think um, that's one reason why I think that they're doing so well. And the fact is, they buy the stuff that they love, right? And the fact is, historically, there is a box, a perimeter how you value a stock. I don't think that will go away because there is some. merits as to how much you pay for a company, like how you value it. But given where things are, I think people are just throwing that out the window. It's buying a concept, right? EV, just buy EV. It's great. I don't care what it is. I just I'm gonna buy it
Yeah.
until it's become like a fraud, right? Like for example, Nikola, right? It went up and went down, right? And it's like and so the thing is that people move in and out so fast. But I think that's what happens. And then people, I think about right. Say Reddit target all the uh, high short interest stock. Part of it is them, and they find a name. But I guarantee you, Wall Street, hedge funds, or other funds piggyback on that too. I
Oh,
guarantee you that
absolutely.
GameStop is not just Reddit. I mean, obviously, we point a finger at Reddit and all the stuff, but major institutional money is involved in trading in and out of the same thing as well. So it's not like Main Street versus Wall Street. Everybody is the same. It's all in there.
Yeah, and so while all this is happening, so there are a few day trader channels that I follow on YouTube, and yeah, so there's some day traders. They're like, what is this? I'm sort of just gonna watch what happens because it was behaving. The behavior of the stock was just nonsense. It did not make any sense in terms of what day traders look at in terms of patterns and other and fundamentals and other things. But some day traders they absolutely went in. They saw what was happening. They went in. They sold and they made money. Um, and then I'm sure some Reddit people they got in, they sold, they made money, and hedge funds and others. Yeah. I mean, at the end of the day, I think Melvin lost
Yeah, yep,
because you know what's interesting is hedge fund as a hedge fund they did not hedge their bet properly. I feel like it's kind of
yeah,
ironic that a hedge fund
yes,
lost that much money. Um, and yeah, and then I would say in terms of losers at the end of the day is aside from Melvin is a bunch of Reddit people who are because
yeah,
on the Reddit stream they're still saying hold 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 hold, so these are all bag holders that um will be left. They probably bought when it was like $100 or even higher, and GameStop is now what, like 60 something,
yep,
I think.
63.
Yeah.
Hmm. Yeah, I mean, so yes, so I was reading Reddit chain too, and sometimes I feel I'm not. Some of them I think is fake, some of them
Yeah.
is real, right? So and I did read something. Oh, I put my life saving in here. What should I do now? I put it at 200 or 300, right? And I just feel sorry for these people. I'm like, in the moment of it, you thought, okay, so because we GameStop going up to 1,000. It's an arbitrary number, right? People just saying it, right? Because it's where
Yeah.
it's going to go. But 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 there are people who believed it, and so they're in it, and now like they are holding the bag and what to do. And so and then actually it moved into this cultural movement, political movement, right? It's us versus them. Small guy versus big guy. Oh, we took down Melvin Capital. Look at how great we are, right? This and that. But at the end, is that the point you're making, or are you trying to make a few bucks so that you can improve your own livelihood? I mean, because I just see people who make
Yeah.
money and able to pay off their student loan, who are able to write a check and help the parent. Like these are like the great story of what has happened as a result of this. But for every good story, I bet you there's at least one or two bad outcome
Yeah.
as well.
Absolutely. So I think it's a mixed bag. I think, particularly with GameStop, I think maybe starting 2019. I think it's June 2019 is I think when Keith Gill, the is what is it, something
Deep
fucking
fucking
value,
value.
deep fucking
Yeah,
value, yeah.
yeah.
Like he also has a YouTube channel. I didn't go visit his YouTube channel. It's like something kitty,
Roaring
where
Kitty. Yeah.
yeah, where he was, he talks about stocks and what he thinks are good picks, I imagine. So this is something that he did on the side while working for Mass Mutual. And in June, I think June 2019 is when he started buying into GameStop because he liked the stock.
Hmm.
He believed in the company or whatever, and he started investing in it. So it's kind of like starts back there, and then end of 2020, Ryan
Cohen.
Cohen. I'm
Yeah,
so bad with names.
that's fine.
Ryan Cohen, invests, or there's news of him investing at the end of the year. And then, so I think it's kind of, maybe it was kind of a slow momentum that was building up and it sort of exploded in January. Um,
Yes. So I mean, I think at the start, I think is correct because basically, Keith Gill sees the fact that GameStop is not blockbuster. There is value in this company,
yes,
and that's how it should start. And he's absolutely correct. Like there is obviously someone see value, like Ryan Cohen, or else he wouldn't buy 9 million shares of the stock, right?
exactly.
So
Yeah.
so there is value to it, and so stock going up makes sense. But but
But I,
but
I think what
okay,
helped explode it, maybe the fuse, was the fact that it was so over leveraged in terms of shorting the stock, right? It
yes,
was shorted above 100%, which
yes.
is ridiculous. I think it was at that point, I think the Redditors were saying, like, hey, look at all these hedge funds. They are shorting the stock beyond 100%, and we all like the stock. So, hey, let's fuck them over and buy up all the shares and drive the price up, and they'll have to, you know, eat the loss.
And
So
it did
I
it. I mean, and yeah,
and it
and and
worked
and it worked, and
short
they did
term,
it.
yeah.
Yeah, and it did it, and they have achieved um, what they set out to do, right? Because there is a short squeeze, stock going up basically 15x, right, in a matter of a week, I guess, or 10 days, right? I mean, I think it was like $20 in mid-January and went to like 500, right? So 25 times, right, in the
Yeah.
matter of I guess 2 week span. And they're right, and the analysis is correct. That's why. So the retail investors know what they're talking about, and it's correct. And when you think about it, right, you can't look down the little guy because one little guy doesn't do anything. But when you have a collective of them, the big herd, they will run you over like there's no tomorrow. They're just going to come at you,
But I think this is
right?
what happened. I think what happened was they did this, and then, so what's interesting is, so I think GameStop, it was a sort of a culmination of a bunch of different things that kind of made it this perfect storm. So in the midst of Redditors driving the price up, Robinhood steps in and restricts the buying of stock,
Mm-hmm. Mm-hmm.
which then I think fuels the Redditors even more in terms of their determination to knock down Goliath,
Mm-hmm.
which is the reference they often made, David versus Goliath. Because here it is, big money Robin Hood, backed up by Citadel, who's bailing out Melvin, and so it does seem like us versus them kind of scenario, even though there are reasons behind why these companies are making the decisions that they're making. But to the Redditors, it's like, hey, they're doing another something else to totally change the rules of the game, so they lock us out. So then all the messages on Reddit was like, hold the line, and I think that's when it
Yeah.
started, is don't sell, even though that's the only thing you can do, just hold the line. And uh, that um, battle call, uh, that's when it changed, I think, from hey, buy the stock to hold the line, and now it's kind of like the message on Reddit is very diffuse. It's not very focused anymore.
Exactly. Yeah.
Yeah.
And plus the fact that the stock start basically catering and just plummeting doesn't help. It was like, oh my God, what do I do now? Do I sell? And someone was like, it's down so much, it's not worth selling anymore. I'm gonna just hold it, right? At this
Yeah.
point, right? They're all like they're all just deflated. But see the thing is that their focus is that, oh, is Main Street versus Wall Street. But the truth is, there are a lot of people at Wall Street made money on this as a result. There
Oh,
are people
absolutely.
who are long GameStop and make a killing because I forgot which fund it was. I think they made $700 million on GameStop because of this. And the funny thing is that with this movement, so it doesn't just involve GameStop, it involves AMC, BlackBerry, and stuff like that. Or I think American Airlines was one of them. That was recently too. The truth is, what they have done one other thing that there could be a consequential effect on these companies is that they drove their stock price to a level where the company could actually sell more shares to help the balance sheet and prolong the life of the company. So give it as an example, AMC been shut down for a long time. AMC is going to go bankrupt or whatever is dead, is so much debt, they're talking about debt. But because of the recent stock prices rising, they were able to sell more stocks. So I think it was the week before, I think the first week of February, say, oh, we're sold enough, raising capital that there's no bankruptcy risk for 2020. I mean, 2021. That's great. All right. This is because of what the Reddit guys do. And as a result of the fact the stock price got drove from 5 to 20, there was a private equity firm, I think Silver Lake, they own $600 million of convertible debt that only pay 3% of interest on AMC. Because the stock went up, they converted the debt to equity and sold it. And I think they made like $120 million off that. So they don't think about that. By what they're doing, they also help Wall Street as well. They bail out Wall Street too. But
Yeah.
because the social kind is always is Main Street versus Wall Street, but Wall Street at the end wins.
Oh, absolutely.
I'm not trying to deflate the movement. I'm sure I get people yelling at me now by saying this, but unfortunately, right, Wall Street wins because what you did, you might kill Melvin, but Melvin's being hurt actually helped these other guys, right? So it's like, yeah.
Yeah, no, I absolutely agree. While I think, you know, while it was happening that last few days in January, it was very exciting, and it was, uh, one because, I'm sure a bunch of redditors also made money, um, and but also it was exciting to quote take down one of the big guys,
Mm-hmm.
because this is something that was visible that actually happened right before their eyes as they were buying into uh, this movement. Some people, I'm sure, were considering it as. Um, but yeah, but in the process, because there's so much that go on behind the scenes, that yeah. But in the end, you're right. Wall Street never really loses. I mean, they're the ones
Yeah,
who set the game.
yeah,
So
and and the fact also is that I think yeah, I mean it's just the social movement. I mean Wall Street does lose their firm that get hurt and stuff like that, but at
yeah,
the end, with the stock going up, it benefit more people than hurt people, right? Whether Main Street or Wall Street, right? Because people are still mostly long, right? They're still betting on thing going up than going down, right? Because short seller is still a small cohort within Wall Street, right? So at the end, if thing goes up, everybody wins. That's just the reality.
that's true. But I think what happened was a lot of the latecomers. So after the stock already went up above 100 and went into 200, 300. I mean, it shot in one day. I think it was Tuesday. So Monday, I don't think it went up that much from beginning closing to opening to closing. I think it was Tuesday. Hold on a second. Let me look at my.
Yeah, so on Monday the 25th, it went up 18%. Tuesday, it went up 92%, which is $71. And Wednesday, it went up 135%, which is $200. And Thursday, I think that's the day when Robinhood,
Yeah.
don't let them trade, went down $153 or 44%. Then Friday, it bounced back up $130 again, up 67%. And at that point, then just start deflating on February 1st, and then just been going down this past week down
Yeah,
what
from
80%.
yeah, it went down. So I think it was Tuesday was when it made sort of the beginning of the significant jump. I think it
Yeah,
opened at 88 and closed at 147. And then it totally gapped up from between Tuesday and Wednesday. So it closed at 147 and opened at 354.
hmm
So yeah, it's crazy. So if you bought Monday or Tuesday, then you made a killing on Wednesday. And
yep.
as long as you sold it before Robinhood restricted, well, actually, even after Robinhood restricted, you could still sell it. So,
So sell exactly.
yeah, so that doesn't matter. But as long as you sold it before Friday or by Friday, you're good because the following
Exactly.
Monday, it just tanked.
Yeah. But then again, go back to the point of Reddit, right? Hold the line, like you won't sell, right?
Right.
Because now, so now it's beyond just making money, right? It's more of like a social issue. Is like, I believe in this cause, so I'm going to stick to it, right? And
Yeah,
so
it's a
so then
statement.
it's like it's a statement now. So I don't know, good or bad. I mean, to me, you want to invest in the stock market, right? You want to improve your financial health, help you, right? I don't think any people who bought GameStop, maybe there are some who bought GameStop just purely for the social movement, right? But
I
then
think so.
but in any point, don't risk your capital that you cannot afford to lose. That's the reality, right? But unfortunately, I think a lot of people risk capital that they could not afford to lose, and that's when it became a tragic story.
I think that's very possible. I think there are people who are in that situation, that they bought into it too late. If you bought it higher than $100, then you definitely lost money. I mean, unless there's another spike coming up down the line, who knows? But or if GameStop as a company manages to turn things around in terms of their business model, that they don't die out like Blockbuster did, which is often the comparison that they make, and they're able to take the company and grow it, then people who are holding the stock will eventually maybe recover the money that they lost. Um,
To a degree, but to go back to $400-500, I'm sorry, it's going
well,
to just take a miracle for that ever happen.
I don't think it will ever get there. Not by
Yeah,
ordinary means.
yeah,
And so if anybody bought it at $400 or $500, then they're not going to recover that. Um, but I think there are some people who bought into it just to sort of uh, in solidarity with the redditors who are making this social, political slash economic statement. I don't know. Um, and then but I think you're right. I think while it had a very exciting 1 week, because I think once it hit February 1st, there really was nothing that was happening. It was just downhill all the way. So that last week of January, while it was exciting, and people who felt like they were tackling Wall Street and bring down one of the Goliaths, maybe they felt good in doing so. And if they happen to lose money in the process, some of them, may have felt like, hey, that's the price I paid for bringing down one of these hedge funds, which we hate for whatever reason, not knowing, you know, they actually serve a purpose, to some extent, and uh, but then they're also, um, yeah, there was a question in there somewhere.
okay.
I think I was trying to make a point, but I kind of got lost in the
Well, I mean,
meandering of it.
I'm the point that makes sense is that I think there's a social movement that's involved, right? There's a lot of pent up anger, right?
Yes.
And I think the pent up anger what that we've seen over the past year. I don't know if it's COVID because we all just went cuckoo because we're stuck at home for so much, and then our mind just went crazy. but there's a lot of pent-up demand is us versus establishment type of mentality. I think, I think also a lot of people got hurt during financial crisis, and so Wall Street has been labeled as this bad guys, and we're the good guys. The bad guys get back with the government, we don't. You know, how come it's like that? Um, I can understand the amount of hate that's involved, I guess, but at the same time, is that one thing that I felt it was a little bit not right because it's like, you know, people who short stock, they try to make a living themselves. So whether they're wealthy people or they're not wealthy people, right? And then you start sending hate mail. I feel like there's a lot of hate that's expressed through whether it's this or some of the social movement. I mean, I don't think hate is gonna improve anything,
No.
right? And if you look in the past, what movement really was successful were the peace movement, right? Whether it is Martin Luther King Jr., whether it's Gandhi, like all these stuff is through peace, right? When you become violent, it just become another form, and then it just get ugly at the end. And no one will be side with you guys. And so I feel like I understand where they're standing from, but then sending hate mail to some of the short seller hedge fund manager doesn't do any good, I don't think. But it's like it turned that way.
Wow, I
And
didn't. Yeah, I didn't realize all that was happening, but that's totally. I believe you. That that probably did happen. Um, yeah, I think and on Reddit there were definitely multiple references to the economic crisis of 2008,
yeah,
the housing market going down, and how the banks got bailed out. There's definitely lots of pent up resentment and anger that stem from that.
yeah.
Um, and yeah, and people. Wow, I didn't realize that individual hedge fund managers were
Yeah,
targeted.
for example, like Andrew Leff is one of the well-known short seller out there who runs the Trump. So for decades, he had published short reports, you know, to say whatever, and he stopped doing that because he get too many hate mail.
Mm.
Stevie Cohen, who is, you know, like the renowned fund manager at Point 72, he disabled his Twitter account because he's getting hate tweet. I mean, it's like it's just like, you know, just like everything else, that doesn't help your cause. Um,
Yeah, but I think you know, very often hate comes from ignorance, right? Because you don't know exactly how the stock market works, and all the underpinnings of it, right? That short selling. Well, again, GameStop was an anomaly because it was shorted above 100%, which doesn't make sense at all, and I think for that specifically, it was targeted. I think, along with
yes.
the other meme stocks, but I mean, the other meme stocks, I don't think the volatility wasn't as high. It didn't go as up as high as GameStop did. And I don't think there was as much momentum on the other stocks as GameStop. Um, but I think had GameStop not been shorted to that extent, you know, I'm not sure. I don't know. Maybe it would have happened anyway. I mean, if it was,
Yeah, I completely agree. I mean, have GameStop not shorted to that magnitude, it would not have gone up. But that just the mechanic of the short squeeze, right?
yeah,
Right? Because the more you're short, the more you have to cover. And then so also risk managers on the fund saying that we're short the stock, it went up 10 times. You have to cover. You can't risk more capital. And so I'm sure the people who cover the top as well because they've been waiting. It's like this makes no sense. And it's to be fair, it makes no sense. It shouldn't like GameStop should at the peak. I think is worth like $30 billion. I mean, I'm sorry, it's not worth $30 billion. I mean,
right,
that it doesn't matter what Ryan Cohen does. It will take. I don't know what it takes to pick up $30 billion, right? So it just doesn't make sense. But to them, I think whatever stock price is, whatever the last buy willing to buy it at, and there's enough demand to push it up there, and so it did. But but it's a phenomenon that I think is a great business school case study. I'm sure it will be there somewhere. Um, but also I think, you know, I have to admit that retail Reddit taught Wall Street a lesson. It's like, dude, you guys are just too stupid, and they are like why you want to short a stock that has been high shorted like this, no matter how convicted you are. Yeah,
What? So was that the lesson that Wall Street learned?
I
Um,
think for one, yes, that I think for whoever want to short stock, they would think again and say, you know what, the short is pretty high. Let's use put options instead of shorting the stock outright. So at least you can limit your capital loss and protect yourself, right? Or the risk parameter, be more careful because you know what, short squeeze is not invented just today. It happened in the past.
oh yeah.
I think like Volkswagen was an example in the past. I'm sure it happened, but this one is one of the rare ones that went up this much, this fast. Um, and so I think it's a lesson and in people's mind going forward. And so, which is good or bad. I mean, and the fact is also right. We will have all this hearing, all this stuff, regulation. Because in theory, you think about right, Wall Street could have gang up on these hedge funds, just basically wolf eating wolves, right, and just kill Melvin. They won, right? But they didn't do it. But they told the retail guys to do it, and I bet you a lot of funds hide under the cover and was involved in the process. So I think part of the reason why when that high, it was that process too, right? Because for Wall Street fund to get together and do this is illegal,
That's right. Yeah. So
right?
that's another right. That's another thing that what the redditors did was not illegal necessarily.
For now, I don't know whether they will change in the future, right? Because
Right.
it showed the power of the collective, what they can do,
And
right?
that's one of the things. So when this was happening, particularly after Robinhood restricted trading, was when it sort of also triggered people in Capitol Hill and questioning whether there should be regulations down the road. And I'm thinking that if they do create more regulation, that it would only hurt the the Main Street folks, not Wall Street.
Most likely, yes.
Yes.
Yeah.
There'll be more restrictions imposed on, the regular investors and regular traders, and, making it more difficult for an individual to, buy into or invest in companies. Um, yeah, so I'm kind of hoping, personally, I'm kind of hoping that there aren't going to be any new regulations that uh, arise as a result of this. That, if the lawmakers, that the lawmakers actually take a very careful look at exactly what happened and understand that a lot of this, what drove it, was uh, sentiment, that it was frustration, it was anger, and so I think the lesson that maybe the government and maybe Wall Street should also understand is, and maybe try not so hard to screw the little guy because they will come back and bite you.
Yeah, but again, I think to be honest with you, the whole financial investing is become more more democratized, where it's just a little guy is getting better at what they do, and I think I think I still remember that there was like a Charles Schwab commercial where like online broker become popular, right? It's great, right? How this commercial, this this like father, have you taken wearing a suit? Have you spoke to your financial advisor and all these stuff? And like it has to be like be in the game, in the know, because the financial advisor know what they're doing. Said, no, I just use Schwab and then whatever, right?
Right.
And then it's like this is now the next phase of it, right? Robinhood, right? It's like the, at the end is you can educate yourself because the data information is all out there, right? And it doesn't take a genius to figure out, right? Because just to put things simply, you buy low and sell high. That's it. That's all it is with stock market, right? You don't have to do anything else. And it just find the company that you like, that you think that that's a good thing, do some research, learn some terminology, and you can do fine, right? And I think that and
Especially in the long term. So if you look
yes,
at this as long term investment, yeah, you will do fine.
yeah.
Yeah.
exactly. And so I think now obviously this is going to hurt the business of Wall Street and whatever I'm involved in, right? That's not great, right? But at the same time, is that right? There are two sides of it, right? Yes, if you don't want to look at it, you want someone to help you with it. Great, right? That's why you pay people to do it. Just like you pay a cleaner to clean your house because you don't want to do it, right? So that's fair. But if you're interested, you can do it yourself. That's fine. I mean, I don't think it's not anything that is so dangerous that you cannot, be involved and just self educate yourself, right? Just like everything else, right?
Yeah. Well, I think one of the rules that came out of, I think it was shortly after 9/11, when the market tanked back then. A lot of one of the rules that came out around that time was the pattern day trading rule, where you
Mhm,
have to have $25,000 minimum balance in your trading account in order for you to day trade. And
mhm,
that's only in the US. And
mhm.
so Canada and elsewhere, they don't have that rule. And so, they could day trade with as little as $5,000. And that rule never really made sense to me, but supposedly the reason why that rule was imposed is to protect the retail traders.
Well, let me put it
I,
this way: in
yeah,
in I mean, in the world, when you have money, it equalizes that you know what you're doing.
that's the theory, right?
That is
But
the theory. I'm
yes,
but right or wrong, but that is our culture, right? If you have money, oh, you must be smart. If you have money, you must be doing something right,
yeah.
right? It could be luck, it could be anything, right? You don't know, right? I mean, but yes, and so I think I don't understand why the rule is $25,000. Why not 50? Why not 100? But just like, right, for people who can invest in hedge fund, there's a minimum net worth that you have to have in order to have access to it, right? It's just the way it is done, right?
But hedge funds, that's at the institutional level.
Even retail level.
Oh, really?
Because it's riskier money, so you're taking higher risk. So therefore, unless you have X amount, like and you will see a lot. And the fact is, I think it's also self-imposed, right? Like a lot of financial advice don't want to deal with people who have less money. They want to deal with certain kinds of, if you have minimum of 500,000 to invest, call us. Basically, you don't have that, don't call me, right? It's like, but that's the game that they set up, right or wrong, right? And also the fact is that if you have that kind of money, that you are more sophisticated, right? That's just the way of looking at it. But to me, it's like it doesn't matter, right? It's like I mean, there's a business to run, and there's a way to look at the masses, right? And so that's why I think a lot of the ETF become popular. And
Hmm.
also, I think there's stuff but there's stuff that is that that Wall Street is making easier for the small guy to invest, right? Because in the past, right, you don't have to, the minimum share you can buy is one share, and you don't have that money, you can buy it. Now they're fractional shares, so
Yeah.
it's not long about how many shares. It's basically, if $100, I want to buy Apple, I can buy Apple. That's fine. Like you can do it now. So I think for all the bad mouthing of Wall Street does do a lot of stuff, right, to innovate, to help the little guys. But at the end, also help Wall Street, but there's more money coming in, right, off a fee. So, but then
Of
in the end, it
course.
works both ways, right? You help each other out, right? That's just the way it works. I mean, this all depends on what angle you're looking at it, right? But there is a democratization of financial investment, and I think it's a good thing for a long run because if you look at it, right, the wealth concentration is all on the high net worth people, right?
Hmm.
And so I think the top 1% owns, I think, 50% of the stock market or something like that. I forgot the exact data. I think I wrote it down somewhere in the course. So therefore, the income inequality in the US is getting worse and worse because if you don't have the extra money to invest, then you are left behind. I mean that is just the reality, right?
I heard one time it was stated that over the past, like, I don't know how many decades, um that some ridiculous number of trillions, it's like $47 trillion worth of wealth basically trickled up from the poor to the top 1% or something like that, or top 10%, that over
Well,
time,
I
well, through various policies,
yeah,
yeah, not just what's happening on Wall Street, but through, tax policies and other economic policies that basically, over the decades, the poor became poorer and the richer became richer. And during that process, the amount of wealth that would have been in the bottom 90%, equals to about 47 trillion, or I don't know the exact number, but it was in the trillions. Uh, and had that not happened, that everybody today would essentially be like earning like $1,000 a month more or something like that. I don't know.
yeah,
Yeah,
yeah.
but
I mean, I mean, it is unbelievable. Yeah,
yeah. So I think there's just a lot of that sort of resentment that's built up over the decades. So this is not, what happened in January is not, if you look deeper enough, this resentment actually runs very deep and very long.
yes,
It's been going on for a very long time. And also what's been going on in the political scene. All the riots in Capitol Hill, and even before that, Trump being elected, and so forth. This is just decades of like, we're kind of sick of, uh, the top 1% just benefit reaping all the benefits, and us, in the bottom, not, you know nobody's caring about us. Nobody's giving us a break. In fact, you're stealing from us to give to the rich, which is also ironic, in the name Robin Hood,
yeah.
that the optics of what they did when they
Marketing,
I
JJ,
I
right?
know,
Marketing, right? That's how it works. That's how they can hook you in.
I know, but what when they restricted trading on Thursday, the 28th, the optics of it is, here is a company that calls itself Robin Hood and doing exactly the opposite of what they should be doing. And they're shutting out the little guys and allowing the hedge funds to, yeah,
I could get that, but again, go back to
I know.
mechanics of that. Robinette could have gone under, and that does no one any good when if that happens. So,
No, I understand that, but I think on that day when it happened, the optics of it was
oh yeah, of
just,
course,
yeah,
yeah.
it was just
Optics,
terrible.
everything, right?
Yeah.
And then some people don't dig into and find out why it did what it did, right? And obviously, conspiracy theory, they will always believe that no, it's just because they work for Citadel, therefore, blah 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 blah.
Yeah.
But the funny thing is that it was in the press before that Melvin is completely out of short, so that doesn't really matter. Like it doesn't help any people. And I also see text saying that you know Melvin's still in. I'm like, no, they're out. Like what else do you want?
Oh, right.
Yeah,
No, I think the message was, because they were down 53%. So
yeah.
the message was down 350%, 40% more to go. So I think, you
They
know,
want to bring it down.
right, they want to bring it down to zero, which
Well,
is like, that was not going to happen.
yeah,
Yeah.
and then go back to the point. Well, it will happen. You have the stock market start tanking, right? Because the other side's going to go down too, right?
Well, yeah.
But again, and then go back to the point where the market went down 4% in the last week. Now all have been recovered, but that hurt the masses too. It's not just by bringing down Melvin and GameStop and doing all these stuff, it created side dominant effect on other stuff that it could have gotten worse, but it didn't, and so that was lucky. But if the market ups in 10, 30%, it does nobody good, right? Everybody's going to lose, right? So
Yeah.
uh, but that's just the reality of it. So
Well, one channel that I follow is a legal channel. So the lawyer on this channel, he actually sort of looked at what happened with GameStop, and he looked at it from a legal lens. What Robinhood did was that legal. And if you look at, I actually didn't go into my account and looked at the service agreement in detail, but at least the way this lawyer broke it down is, in the service agreement, when you open a Robinhood account, it basically has all these terms that give a lot of leeway to Robinhood to basically, you know, go as far as terminating your account for any reason that they deem necessary. You
Yeah.
know, that they don't necessarily have to accept your buy or sell orders. That they could terminate this, and especially um, if you're dipping into your margin as opposed to your cash value, then they could absolutely have the right to not fulfill these orders. And so
Yep.
what they did, because soon after Robinhood did this, there was a class action lawsuit that was filed by someone in New York, I think. They filed a lawsuit, and I think they were trying to make it class action.
Yep.
But if you look at the service agreement, it's uh, there's really not a sound merit there for it to be a class action lawsuit. So
Yeah.
yeah,
Well, nobody read the fine print, right? I'm not sure
I
who
I
actually read the fine print,
nobody
right? When you
reads
open
it.
something, nobody
But
reads it. So
yeah, but the service, the agreement is essentially a contract that you're signing when you're opening the account.
exactly,
You're
but
agreeing to
that's a
all these
thing.
terms. Yeah,
Yeah. But
yeah.
I don't. I guarantee you, 99.9% of people don't read the fine print.
Oh no, absolutely. I don't read it.
Yeah.
Who has
Exactly.
time to read all that?
But you sign your name on it. You're agreeing to it, though, right? So there's a lesson here. You should read all the fine print before you sign something because it's a legal document.
Yes, that's true. But here's the thing, right? Okay, let's say you don't agree with these terms, so you don't open a Robinhood account. So you
Yep.
go to another brokerage, but they have very similar terms there too. So that
Yeah.
means unless you agree to their terms, you cannot open any brokerage
But that's
account.
a social. I'm not making. But there's a social cost here, right? You know what? These are bad Wall Street people. We should not then put money in the market, and the market will collapse. This is how I'm leading to,
No, no,
right? Right?
I absolutely,
Right?
I yeah, I'm actually kind of, you know, arguing a moot point, but Um, I think though, the fact that I think that's fairly enlightening in terms of what could have happened or had if Robin Hood went down. I think that's a very valid point you made because that's not something that was actually talked about in any of the articles that I read. Um,
Yeah. I mean, because think about it. Right? As soon as they stop trading or cease trading people to buy that, they went out and raised 2 rounds of capital. Why? Right? It's like,
they
why
had
do you need the
to.
cap? They had to raise the capital in order for them to continue to operate, right? So, but nobody think about that, like, because otherwise, I mean, they're all fine. It's one thing, right? But they went out and raised multiple rounds of capital to ensure the balance sheet so that they can continue to operate going forward.
Yeah.
And when things finally calm down to the point where Friday they basically lift the restriction on buying those stocks instead of just one share, you can buy whatever you want because now they have finally right sell down whatever that they need, raise enough capital that they can continue to operate going forward.
Well, I think even
And then
after
whenever they're done, so
Yeah, I think even when
yeah, go ahead.
they lifted the restriction, I think they limited to like a certain number of shares. Like you can't buy more
Yeah,
than
but
yeah.
I think on Friday they actually lift even the share limit. So if
Okay.
you look at GameStop, it actually had a run on Friday from 51 to 95 in 10 minutes,
Ah, okay.
right? So they came out open on Thursday, basically lifting restriction on GameStop and stuff like that. And it started opened up a little bit, then went down. Now it's from 51 to 95, because I think people realized, oh, I can buy GameStop again. And from 95 to $60 or something, this one's collapsed again. So
Yeah. Yeah. But I think if people did use their stimulus money to buy these stocks, that I mean, that those funds are finite, so it's not like they could keep buying to keep
well,
raising
there
the
may be
prices.
$1.9 trillion coming maybe after March. You don't know, right? I mean, actually, this actually go back to a different point, and this beyond GameStop is about the stock market in general, right?
Yes.
Is that the market has been great, and you can say government policy, right? Because of all the government policy, yeah, it helps. dying businesses. I mean, there are real lives involved, the airlines, the restaurants, and so forth, and help them. But at the same time, is that and give money to pure little guy to make money in the stock market. That's great. But again, the concentration of wealth still remain on the top 1%, top 10%, whatever, and they're heavily invested in the stock market. So it the higher the stock market go, actually, it create even a bigger income inequality as a result. So it's kind of like a problem that can never go away, right? Because for anybody, you want the market to go up because it feels good because everybody has some retirement account, 401k, and stuff like that, all benefit from it, right? But disproportionately, because the top 10% own so much in stock, as they go, they will still go higher than you do because they have a bigger base, right? 10% of 100,000 and 10% of $1,000. That's the difference we're talking about,
Yeah.
right? So it's like, right, but this is something that I don't know whether it will ever change. It's just the reality of it.
Yeah, I don't know if I would want that aspect to change. Because like how would you change it that's even like, you know, unless
Well,
you
if you really want to redistribute income, right, and wealth, right, what you have to do is you have to massively increase marginal tax rate on the high income earner, right? And
yes.
then use that money to help the lower income people. But then go back to the point, do you believe in income distribution, right? And that become then you become a socialistic government. So all these is opening cans of worms here. But then can it be done? Yeah. Like, I mean, government can do this, right? Will you be happy
Yeah.
about it, right?
Well,
Because 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 that's just the reality of where we are. And also there are a lot of social program, right? Where the poor get benefit, but the wealthy doesn't get any benefit because they're wealthy, which is fine, right? This is how it's supposed to be. That's what's how social safety net is supposed to work. But there's also abuse in the system on the lower end, right? So is that fair? Like you gotta. It's a tough thing, and then
well, some would argue that the current tax system as it exists benefits disproportionately the wealthy. And this is part of the reason why the wealthy gets wealthier. That, um, you know, that the lower end of the people are actually taxed more heavily, proportionately.
well,
So
proportionally, because as a percentage of the income, right? Because obviously the wealthier have a different way to play the tax code and able to minimize their effective tax rate, right?
yeah,
That's one way of doing it,
yeah,
right? Because they have the money to do it, right? So yeah, I mean that's what I'm saying. Then you can again take out the loophole or just simplify the system, right? I mean, because the UX tax code is very complicated. There's a lot of ways you can do this. Could everybody just say, you know what, three tax bracket, you make X amount, that's it. There's no deduction. Are people going to be happy about it? I don't know. I mean, people have mortgage. You didn't tell me that I cannot deduct my mortgage interest. Will you be happy about it? And also, it go back to the fact is the high income state tax state versus low income state tax, right? Right. Give you an example, right? So with the, with the last administration of Trump, where the deduction of SALT kept at 10,000, it really hurt New York and California, right? Because basically these are high state tax, income tax state, and property tax is not cheap, right? But now the maximum you can deduct is just 10,000, right? Is that fair, right? But then by doing this, then but let's say you move the taxes, there's no state income tax. All you pay is just property tax. So it didn't hurt your tax bill as much. Like there are so many things involved that is just um and to me just like why can't we just simplify things? Just say, hey, you know what? Everybody pay this amount of tax at this bracket and just be it. No deduction. Then you have people saying that, well, you can't deduct charity giving, you hurt all the nonprofit. And there's always all these noises coming from everywhere. And no one ever will be happy. I think that's unfortunate. That's the conclusion.
That's yeah. So that's the bottom line. No one's
Yeah.
gonna be happy.
Everybody's gonna be pissed about something. I don't know what, but everybody's gonna be pissed about something, right?
It's kind of like the opening line of Anna Karenina, that we're all gonna be happy for different reasons, unhappy for different reasons.
Reason exactly. Yeah, yeah. That's
Well,
sad, but it's true.
yeah, but I think though, if there was a silver lining here, what would it be?
I think SEC should look closer to why the heck they allow people to short more than 100% of a stock.
I think so. I think that's
That's one.
definitely, yeah.
That's one. I mean, I think, I mean, regulation is good if it's good regulation, right? Regulation is not good for the sake of just regulation, but you have like good regulation, great. And two is that I think it just show how technology is revolutionizing whatever we do, right? Whether it's stock market or whatever it is, right? And the collective makes a difference. So therefore, I think, but at the same time, is you have to be responsible for what you say, right? And it's like, I mean, because on Reddit, I do see some comments saying that you don't have money to lose, don't play this, right?
Yes,
Like you can
I've seen
only,
that.
right? And I think that's important to make people know it's not like this is not a game. This is money. This is money that you earn and save. Then you should be wise and think about what you do, not just because you could get into the heat of the moment. Oh, it's going up. I'm fear of missing out. I gotta buy this. It's going up, and next thing you know, it's down 80%.
FOMO, yeah. Fear of missing
Yes,
out, FOMO.
yeah. I mean, but all humans have that tendency, right?
Yeah.
Like, oh my God, it's going up. I'm sure there's a lot of FOMO going on with like Tesla, right? All of a sudden it's like, oh, it's a great stock. I like this. All of a sudden it's up 10 times. Like, what happened? And then as soon as you buy it, Murphy's Law, it goes down. That usually happens, right? That's just the way it is.
Yeah, but
You wait, and then if you finally pull the trigger, and that's the top.
right, right. But I think that's the, yeah. Yeah, okay.
So yeah, so basically, I think the full landing is from that side, but also from an individual perspective, is that you gotta know your game plan. Don't buy because everybody's just like everybody is just like saying this is great, right? Just make sure you do your homework and say, okay, does it make sense for me? You can play. You can because it's now speculating, it's not investing, right? Just like on a casino, you go in there, you have $100, you lose it, you okay with it, fine. And if that $100 become 10,000, better for you, right? But I think that's something that you have to be aware that you use as a play money as opposed to, oh, I think because so and so turned 20,000 into 10 million, I can do the same thing as well, right? Because by the time 20,000 become 20 million, that's toward the end as opposed to the beginning,
Yeah.
right?
Yeah.
Right. So but I think, yeah, but I think the silver lining is that stop calling retail investors dumb money, because I don't think retail is dumb money. I mean, there's always dumb money somewhere, retail institutional, right? But I think it's true that given the amount of information out there, people are smart. People are intelligent. They can make their own decision, and there are a lot of people who make wise and smart decision out there. And so
Yeah.
I don't think, just think of it that way. So
Well, I think the dumb money, that's an industry term. It's not the people who are calling themselves dumb money.
oh yeah, of course, yeah.
Yeah, yeah. But I think on the flip side, I think we should stop hate mailing or hating the hedge fund managers, because especially like specific individuals,
Yeah.
it's not the person's fault of any one particular hedge fund manager what happened.
Yeah, and I
Yeah,
agree, and I think that the I always use the word displeasure instead of hate of certain thing is never like a group of people. It could be individual that have bad behavior, right? But then it's not the entire group saying that because of one bad apple, the whole thing stinks. I don't buy that, right? Whether it is
right.
Wall Street, whether it is Black Lives Matter, right? You can't say because this one group is bad, everyone is bad. That's not true, right?
That's not
But
true.
but then I think a lot of people simplify it and saying this is either with us or with them. There's no in between. I mean, that's I feel like that is the one thing
Yeah.
that I found in the past probably decade. This country is moving to too extreme. There's no middle ground. Like it can be like there's value on both sides. Let's work it out. No, it's either this side or that side. There's no in between. And I think to me
Yeah.
that will hurt this country in the long run as a result of that.
Oh, absolutely, I agree. And I think that's happening more and more because people are not actually talking. They're just espousing their own side of things in short sound bites, and but they're not actually having a discussion or dialogue or any kind of thoughtful, meaningful, conversation and finding out where the common grounds are. You know, so I think, but that's kind of where it needs to start. Is let's kind of talk about this and talk it through. No, I'm on this side. This is what I believe. You're the and actually also the sentiment that the opposing side is the enemy and they're evil.
Yes.
I think
Yes.
that sort of feeds into the whole dysfunction of this polarized society, which doesn't help anyone. And I think that also, came out during the whole GameStop thing. Is they saw the hedge fund and people who are shorting GameStop stock as evil, as the enemy.
I'm
That when it,
patriotic. Yeah.
yeah, that we need to topple them. And while they succeeded in crippling one hedge fund in the process, they could have possibly brought down the entire market if this continued. But maybe it is the existing market mechanisms that just kind of kicked in to prevent that, or the movement, quote, movement itself sort of lost steam. And, that definitely was not sustainable. And, it was
Yeah,
kind of
and
clear
the
that it
fact I
was not
think
going to last.
they're now moving to biotech last. I mean, I think on Thursday or Friday they're now going away because there's this spread too thin, right? You would concentrate
Yeah.
on one stock, makes sense. And the fact is, you concentrate on stock that is like a smaller in size. Because you look at it, it's all the low stock price stock that's going up, all the small market caps are going up with high short interest, and so they're concentrating on just these things. But then when you start spreading thin, then the herd no longer have that effect, and then you will just go up and down afterwards, just die down really quickly, and then that's the end.
Yeah, there's no clear agreement either in terms of which one to focus on. And so they're kind of going in all different directions. So
Yeah.
these kind of leaderless movements, they do sort of die out very quickly. And so, if they really wanted to affect change, I mean, it was exciting to see what happened. And, some of us on the sideline were like, yay, little guy,
Mm-hmm.
we were cheering them on, some, even. But I think ultimately, uh, I don't know if it really changed anything other than sort of more concern on the part of um, regulators and policymakers, and maybe the big Wall Street players too. And
I mean,
hopefully, my hope is that they're not looking at this to restrict the little guys further, but have a really thoughtful analysis of what happened, and and if there are regulations, that these are thoughtful regulations that come out of it.
yeah, but I think also the fact that it shows that I think with what happened that hopefully for the retail investor that they can believe in themselves, saying that what I can do this, right? I think this can be done. Is not a difficult. No, it's not a game that is out of my reach. I can do this, and so I think that having more retail investors doing this, I think, is a good thing in the long run, because then they can all participate, in the wealth creation as a
Mm.
result of the stock market, right? Because I think a lot of people are just left out because they're not in the stock market, so they don't have that wealth creation, right? Because you make nothing in saving, you make nothing in bonds nowadays. So the only wealth creation mechanism It's, I guess, real estate, I guess, stock market, I guess, art of various form. But then those takes a lot of capital, right? So, like it seems like stock market is the only mechanism that you have low capital, you can still participate, right?
Yeah, yeah. So, yeah. So on that note, I mean that's a hopeful note. I think we could leave on that.
Yeah,
That we can all participate in creating wealth. While any one of us may not eventually become a billionaire, but still, like whatever money you have, you can grow it. And participate in this market. So yeah, and and I think the technology and the commissions and fees basically going down to zero um, is good. I think overall, uh, providing access to more and more people so they can participate in the market. Yeah,
yeah, I totally agree with that.
yeah. So you yourself, you've been interested in the stock market since I think you said you were in high school or college.
In college, yeah. So I started trading stocks on my own in college. I think junior year in college. So I went through the dot-com boom. So I
Ah,
see all that hype. So this in a way is like a dot-com boom a little bit, right? Because stock just goes up because someone says something on the chat and then just went straight up. Like this happens. And so it actually remind me of those days a little bit. And in a way, it's kind of scary because usually it means that the market is getting close to the top than
yeah.
the bottom. But whatever, it's just I have one former colleague, who wasn't old enough to live through a dot-com day. He's like, oh, this is what dot-com feels like. I'm like, yeah, this is how dot-com felt like. It just stuff just goes up and up and up, and you don't know why, but it just does until one day it just goes down, and then you're like, oh crap, this is not good.
So do you see this the market, because the market is crazy high right now. Do you see this sort of retracting anytime soon?
At some point, yes. I think it depends on what happened to the stimulus, what happened to the Federal Reserve, because you think about this whole thing right now, the stock market or this is a function of liquidity, right? It's that it's supply and demand. When you have a lot of money coming in, you have to go somewhere, right? You go to bond, you go to stock, or some asset. And so, as a part of the reason why the market is doing so well is because we got a huge stimulus, basically two rounds last year, maybe a third round now coming up. We have the Federal Reserve buying $120 billion of treasury a month. So they're adding a trillion something a year. And that's a lot of money throwing in an economy that is what, 24 trillion right now. So that's a lot.
Wait,
And
what does that exactly mean? The Federal Reserve is, what did you say it's doing?
okay, so basically, it all started during the financial crisis, right? Because Fed, unlike other central banks in the world, don't believe cutting interest rate to negative. So they have been zero bound. And the only way to expand the financial liquidity that they can put in the system, they start buying bond, because they cannot buy stock unlike the Japanese central bank, right? So they're buying bonds, and that's a way to provide liquidity in the system. So that's basically what we call QE back in the that's what we call quantitative easing. So we went for three rounds of that since the financial crisis, QE one, two, and three, and now it's kind of like QE infinity. Basically, during the March COVID drawdown, they went and put in all these facilities that they used during the financial crisis and put everything back in, and they started buying all these bonds. And then historically they only buy treasuries and like mortgage-backed security. On this time around, they actually ran into buying corporate debt as well. So they're just
Okay.
throwing money in the system. And so actually a lot of companies who had might have financial risk back in March got saved because Federal Reserve is coming in, backstopping all these debt from basically, it's just allowing the market to function, and so these companies can raise capital and then move forward. And so right now they're still buying the bond at the same pace as it was back in March.
Oh,
But clearly, economy has been ending, right? So basically, the Federal Reserve is adding over $1 trillion liquidity into the bond market, and that money, right? So someone have a bond, whether it's government issuing bond, like this, like these money have to go somewhere, right? So some people will sell it and then they will go buy other asset, right? So it's just an effect, and so as long as the Federal Reserve is providing liquidity, we get stimulus. It's hard for the market to go down a lot. Like, but you just look back to the episode that happened. It's like you remember in 2018, in the fall going to Christmas, the market went down like, I don't know, 25% in the middle of 2 months. And the reason for that is because for about a year at that point, the Fed stopped buying bonds. They stopped the quantitative easing. And if anything, they're actually reducing the holding that they have. So they actually let the stuff mature and shrinking the balance sheet.
Hmm.
And it create a tightening in the financial system. So the market just went down. So, so for that to happen, you have to have a change in especially the Federal Reserve to either talking about reducing the size of bond they're buying, raising interest rate. Otherwise, this market was. I mean, you have correction, like we're correction last year, right? Even like I think October went on 10% in like a week, so that can happen still. But to see a market going down 30, 40%, that is very unlikely until we get some one black swan event, like some other kind of COVID that shut down everything, which since it happened once already, it probably won't happen again. So
Yeah.
maybe some nuclear bomb went off or some war happened, something that we just don't expect, then yeah, right, that will happen. But otherwise, the market will just continue to grind higher with this correction. But the pace of it going up is going to slow down because the market is getting expensive. But then interest rate zero, so there's no alternative, right? So that's what we call TINA. There is no alternative. Um,
Trend? Did you say trend zero?
well, I'm sorry.
Did you say
The
trend
uh,
trend zero?
the interest rate is at zero the whole
Oh,
time,
oh,
right?
I see, I see. Yes.
Yeah, yeah. So would it drop? Yeah, I mean we'll have 5-10%. I mean 5-10% correction drop is very normal.
Yeah.
It happens all the time. Um, to have a big correction, it could happen probably maybe second half of this year because if inflation, because market always anticipate what will happen as opposed to what is actually happening, right? Just like how it bottomed in March and took off when things are still really bad. So if one sign is if we start seeing inflation going up in the data and market, then people say, oh no, Fed have to start either slow down their bond buying or something because a dual mandate for the Fed is maximum employment, but also price control, right? So there won't be crazy inflation, right? And if inflation start going crazy for a bit, then people start thinking, oh, Fed might actually have to slow down bond buying, and there's what we call taper tantrum, where they're tapering down what they're buying, and the market won't like it, and they will just go down, I don't know, 20%, and then it'll bounce back up. So I mean, right now, the fact is that the one thing we've learned is that whenever market goes down, the government, the Fed will bail you out no matter what. We'll see it time and time again. We were seeing it every time. So I guess the lesson from this is that if the market goes down 50%, just buy. It doesn't matter. You just buy, right?
Yeah. Yeah.
I mean, you have extra money on the side because you know what, you always make money as a result of it. And unfortunately, that's a sad thing, but it's true. And so I think second half will be tougher. I don't think the market will go up as much as it has been, and I think volatility will go up as a result because now everything back to normal and everything is good. What's next is probably bad news at this point, right? Probably bad information now going forward. And if bad information, market can probably go down as a result.
Mm.
I mean, one possible thing that can drive the market down because it's so concentrated on five stocks, right? Apple, Google, Microsoft. If there's any regulation by the government that will hurt these five stocks, Amazon, all this stuff, then they can bring the market down because they have such a big weight in the market, right? So that is more of a market mechanics. Like the rest of the small stock can go up, but if these five stock goes down, it'll bring down the whole market because they have such a heavy weight in the market.
Yeah, that's another sort of unprecedented thing that happened the past year, is those five or handful of tech companies basically,
Yeah.
um, yeah,
I mean,
increasing so much market
historically,
share.
when a stock becomes such a big percentage of the S&P, or a sector become a big sector of the S&P, it usually doesn't last, and you're always correct. Right? You can think about the oil industry in the 80s, the tech back in 2000, or the financials in the 08. There's such a big part of the index. Something bad bound to happen, and they come back in. Let's see if use a famous word. Is this time different? I mean,
I
I
don't know
don't think it
either.
will, right? So if that's the case, then there's a good shot that all these stocks have run this course, and at some point, technology is not the place to invest. It's somewhere else.
I kind of highly doubt that, though. I think technology will always have a huge, will play a huge role in future economies.
I don't agree with that, but then they can go down a lot before they come back up. Just clearly the case in .com to now, right?
I see.
Tech was leading sector in 2000. Then you went down for a long time, and now it's back to the leading sector again, right? So technology will always play a part. Don't get me wrong, right? It's just that is this is it the time that you want to put new money into technology,
Hmm.
or is it time to put money into somewhere else? Because right, the market is the market, right? And then there's subsector of the market. So you just want to buy the market, you just buy S&P, whatever, that's fine. But you want to just play individual stocks. So is it time to buy Apple at this price or Microsoft at this price? I can't tell you because you think about right, S&P as an index post.com, it was flat basically from 2000 to 2010. Like it didn't do anything for a decade.
Really?
Yeah, so if you look at S&P, I'm give you a return right here, right? Let's say start with December 31st, 2009 to December 31st, 2019. Uh, let's see. I mean, actually, no, not 19. That's 10 years, right? 2000. No, no, sorry, I mean 1999. Sorry, this is the wrong year, right? So from December 31st, 1999, when you bought in, and to December 31st, 2009, the whole index was down 24% in that 10-year period.
What?
And
So what?
then,
Yeah.
so basically, S&P on December 31st, 1999 was around 1,400. And then on December 31st, 2009, a decade is around 1,100. So you lost 24% by holding S&P for a decade. Now you will get dividend. So you adjust dividend, you'll be down 9% instead of 24%. But basically, your annualized loss is a percent a year for that. It's a lost decade for the S&P. But at the same time, if you invested in the Russell 2000, which is the small cap stock, right, from 1999 to 2009, you would have been up with dividend 40% in that period. So you'd be up, not a great return, but you'd be up 2% a year as opposed to being down 2% a year. So as an overall, the market was pretty bad in general, but it mattered where you invest. And so it could be a lost decade where you hold Apple stock you buy today for the next 10 years, you get nothing
Hmm.
because the stock would just be staying like if you hold for long term and don't trade it, right? Maybe Apple is the same price 10 years from now as it is today. I don't know that, right?
Yeah.
But when an asset gets to a certain level of valuation, it makes no sense. Like it's not going down a lot, but you will not make anything. So that's something to think about. And then so there's a market. So because so as people talk about on CNBC, last year was a stock market. This year is a market of stocks. Right? There's a difference to it, right? Stock market is just a market going up. Doesn't matter what you buy, right? But this year is market of stocks, where perhaps the market S&P might do nothing, but there's a lot of stocks inside the market that will do really well. For example, GameStop, right? So therefore, it goes to the point where do you just want to buy index fund or do you want to buy your own stocks, right? And
Hmm.
find the winners that way. So the market changes, and that's why I think stock market is interesting
Yeah.
because changes from one thing and I mean, I think the psychology doesn't change. There's always when things really good. There's always euphoria. When things really bad, there's always depression. People feel like, oh, this is over. And those are the extreme points, right? And in between is all this stuff, and it changes every time. But then it history doesn't repeat itself; it always rhymes. And so there is some rhythm to the market today compared to the .com era. May not be to that extreme yet, but you are seeing it flaring up in various places.
That that
So
that's a really nice way of putting it. That there's a rhyme to it. That it's not necessarily repeating itself in the exact way, but there's a rhyme.
yeah,
Maybe not a reason.
sometimes like GameStop going up to
Sometimes there's a reason.
500 is so yeah.
Exactly.
I I mean I can try I can tell you how it happened mechanically, but does it make sense to me? No, but it did. So it did.
Yeah, I just think that it's just a culmination of like all these sort of different elements sort of converging to create this perfect storm. It's one of
Yeah.
those blips that happened. And will that repeat? Personally, I don't really see it repeating, not in the same way. At least
Not in the same
from,
stock, but it will happen again in the future at some point, because short squeezes like this happen, right? Like Volkswagen happened, like years back. So it happened at GameStop this year. So you know what? It will happen again down the road. I don't know when, but
mm,
something like this will happen again because people will forget. Oh, the GameStop happened. People forget about Volkswagen already, right? Or that's why people short 130% of GameStop,
wait, when did
right?
Volkswagen happen?
I can't remember exactly.
And was it a similar situation where it was a bunch of retailers saying like, "Hey, let's short squeeze this"?
I don't think it's a bunch of retailers short squeezing it, but I think it was just a mechanical of the market and squeeze it. Let me see, when was it? It was 2008 and nine. So you went from 200. Well, no, it's crazy, but I think it went from 200 euro to 500 euro in 2 months. So
That's pretty dramatic. Yeah.
yeah, it's dramatic. But it was purely a mechanism, short squeeze, and next thing you know, in a year, it's down to 60 euro. But then also '08 happened, '09 happened. So
Right, right. Um,
yeah, so
yeah, yeah. I know that these short squeezes happened, but I think the fact that there was a bunch of, maybe in the millions of,
actually, I take it back. On
yeah.
actually on the because I was looking at just the closing price on the intraday basis, right? It hit 1,000 euro
Oh,
in the
wow.
month of October '08. And so basically in August '08, it was trading around 200 euro. September, it went from 200 to a high of 300. And then in October, it basically went from a low of 200 to a high of 1,000
That's
within that one
interesting
month.
because right around that time is when all these big banks failed.
Financial crisis,
Yeah,
exactly.
that's when
Hmm.
the financial crisis actually hit in that fall of
Exactly. Yeah.
2008.
Yeah.
Yeah. So that's yeah.
So it happens. There's some trigger for it. I don't remember what it was. It's been too long ago, but it happened. So it's not anything new. I mean, yeah, I don't think it went up 25 times like GameStop. That I don't think can be repeated. But short squeeze will always happen. It's just it will.
Um, yeah, I think in order for something like GameStop to be repeated, there has to be another sort of rally of people with just as much sort of venom. Well,
Yes.
venom is harsh. I would say uh, frustration that fuel this sort of, and
You
also
can.
frustration, but also a sense of optimism in a sense, because I think there's also some degree of positivity, meaning like, hey, I could actually do something about this, so I'm going to put my money in it and
Yep.
help this cause, sort of
Well, I
sentiment.
agree. Yeah.
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 But anyway, I hope not too many people lost their money, and certainly I hope nobody put in, their savings or money they couldn't lose into this. um but you know yeah.
I mean, I definitely, I think we can all hope that, and I really wish everybody well. But
Yeah.
but we know deep down there are people who are just holding the stock, buying it at 300, and just like,
Oh yeah.
what do I do now, right?
Yeah.
And so
So what would you advise someone like that who is in that situation? They bought it at 200 or 300 and they're still holding.
sell it and move on, because I can't tell you where the stock's going to go at 60 something. You can still is say that it is overvalued, right? I mean, honestly, like if I just were looking at this, I can make a case. If something happened, you can go back to 100, 120, right?
Tops, but it's never going to be 3, 400, 500.
But you
Yeah.
don't know though, right? You don't know what will happen in the future, right? Maybe
Mm-hmm.
Ryan Cohen wave his magic wand and just does something, and then something. I can tell you, or all of a sudden say, you know what? Elon Musk felt charitable and say, you know what? I'll throw in some money in there because I'm so wealthy. I'll just take it private,
Well,
or
that's
I'll
it.
use Tesla stock to buy it or something. Whatever, right? It's
Yeah.
like,
But I would say among the players, right? So you're looking at the GameStop situation, and then you have the redditors, you have the hedge funds, and you have the SEC kind of like looking at this and shaking their head, and the lawmakers, sort of rallying, holding hands across the aisle. You have people like Ted Cruz and Alexandra or Cortez, AOC or Hey, I'm sorry. I don't know the full.
8OC.
I don't know the full name. I'm so sorry. And then Elizabeth Warren and
Alexandria Ocasio-Cortez.
okay, Alessandria or Ocasio. That's it. Ocasio Cortez.
Ocasio-Cortez.
I am so sorry for butchering her name. But those guys basically, standing. I'm not sure if solidarity is the right word, but they were all sort of like saying, yeah, they were all sort of on the side of the little guys
Yes.
coming out. And, but then you also have this is the piece that I found curious people like Elon Musk and others coming out and, you know, um, in support of the Redditors. And I'm not sure if they're doing that actually helped.
It doesn't. I think with Elon Musk, right, all he did was just tweeted Gamestonk, I
Yeah,
think,
yeah,
and then draw the stock up. And then you got Chamath Palihapitiya came out saying he bought some 115 call and he sold the next day, making a profit.
yeah.
I think it's good that you follow a little guy, but when you are such an influential person and you tweet something like this and say something like this, you only add fuel to a fire that's burning.
Yes.
And these guys are smart enough to know that this is a euphoria mania, and so it doesn't help the situation.
Because
And
I
if
think,
anything,
yeah.
and if anything, by these guys saying something, it actually made people feel like, oh, I should be in now because Elon Musk say yes or whatever. Just say for example, right? Like this is why I feel the market is going in this euphoria. So Elon Musk saying to go on Signal, right, to just change the platform. But but then people confuse that to a stock that's out there. That's called Signal Advance. It's a small
Mm,
cap stock trading in 20, $30 million, right? It's a measurement instruments specialty company based in Texas. Because people thought Elon Musk say Signal, the stock went from I think what price is it? About a buck to $40. I mean, I mean, these people have so much power in social media. It just create confusion and chaos, right? Now the stock's back under $3, but it did go to actually not too bad. It went to $70 intraday, right? In a matter of
yeah.
3 days. Like There are people who bought the stock at $70, I'm sure,
Yeah,
right?
but
Because he traded it.
did it fall back down?
Now it's at $2.71.
Okay, yeah, yeah. So it went back down to normal. Yeah.
Yeah, right. So, but there are people who bought this because oh, Elon Musk said that, and then see the stock going, and then they bought the stock. Right now, obviously, may not the guy who has 70 might have gotten out at 50, whatever, took a loss. But think of people who bought at 40 or $50 and holding it now it's $2. So what did I do? And this stock never will come back because always trade at a dollar for as far as I can see
Yeah.
until this blip to happen.
Yeah.
And so I think people who have these kind of power, this kind of social media influencer, like, I mean, come on, you guys can be more responsible, right? Because I feel like even if for a little guy, like by saying what you're saying, it actually add credence to, oh, GameStop, it's going higher, it's worth this, I should hold this, I should stay on it, right? And so that create a problem there.
Yeah, that's the point I was gonna make. That that in the Reddit, that hey, they would post, or they would take his tweet and post it on Reddit and say, hey, Elon is for us. I'm sort of paraphrasing what they're saying, but so we should hold. So it wasn't just as the Redditor signaling people to buy into the stock, but also if you have it, to hold the line. And I think that kind of call to action is a bit dangerous, you know. So you have all these bag holders basically propping up uh, all of these others who are taking this opportunity to sell and take whatever gain, and then making money. um, but yeah, you have so many people. I'm sure there are a whole bunch of people who are still holding on to this. So
And I think one thing is human nature. I think I do it myself too. Is that when something bad happened, you look someone to blame, right? That oh, it's not your fault that I bought this stock or I did this at this price, right? It's that person's fault, or it's Robinhood's fault, it's the Wall Street fault, right? But no one point a gun to your head and say you should buy GameStop at 300 or whatever, right? You did it yourself. And so, but then people always find someone to play. And I get the hatred against Wall Street and stuff like that, right? I mean, they are successful for the reason you said the game is rigged or whatever, but the game, you know what? I can tell you the little guys who will do just fine, right? It's like my dad don't even have a college education. He did find the stock market, just buy stocks. I think the stock is good. I think Apple is good. I just buy it for long term. And he done well, right? And so therefore, it's not against the little guys, right? Like, it just have to be wise what you did and learn from your mistakes and move forward. But I feel like every time that something goes wrong in that society, we just point finger at somebody else, like you
yeah,
because of you, and so you just kind of disassociate yourself from the mistake that you make. And I think the point to take out from this effect is people can say there's a lot of noise out there. There's fake news, there's real news, there's biased news, there's whatever it is. But you have your own mind, and you should be educate yourself. Say, does that make sense? Does that not make sense? Should I do this? And own up to your decision. Good decision, great. Bad decision, okay. Well, did I screw up? Move on, and don't do it again. But I think people are so easy just pointing finger at somebody else and just disassociate the mistake from themselves. And I
yeah,
think that to me is much more dangerous.
yeah, yeah. And actually, also, I think not listening to any one particular person. um, but so if one person is saying one thing, and if it's true, then there must be other people who are actually also agreeing with that thing. So like, if you can't hang all your hopes and doing something just because this person said it.
Yes.
Yeah, because yeah, and that doesn't help you in the long run. But I think an earlier point that you made is, so here with the internet and also technology, the advancement of technology has really made not just the ability to trade and enter into the market accessible to everyone, but the fact that there's a lot of information out there that we can access for free too. Like, you don't necessarily have to buy like the subscription base to these market information and market data. but there's a lot of free stuff that's out there that you should just really educate yourself, um, and um, and as much as possible, uh, on how the stock market actually works, and also looking into different companies. If you're not buying indexes, and if you're buying individual equity into individual companies, actually research the company and see if you like to invest in them. But I think that that's the ultimately, um, that's where it lands, is the responsibility of the individual to make informed choices.
Yeah, I agree. And the fact
Yeah.
is that, going to the stock market, right? Unless you actually do it, I mean, you won't learn. And I think it just through making mistakes or actually doing it, just like everything else, right? That you get a sense of how this thing work, and then you slowly get better at it, right? And just don't be afraid. I mean, for those who haven't invested or just make a mistake this time, don't be afraid to say, okay, I screw up, that's it, I'm not doing it. Just like, you know what, you will learn from it and you will gain insight, wisdom, and don't be afraid of making a mistake, all right? And just because not everything that you do will be right, you will lose money. There's
Oh
no
yeah.
one that make money on everything you do. You will lose money, but you just learn how can I maximize profit and minimize my losses, and just learn over time to do it. And then in the long run, you work out fine.
Yeah, I think that that's absolutely right. In the beginning, you'll make so many mistakes that you will end up losing money. And I think if you go into that knowing that you're going to lose money, then that will also help you make decisions in terms of, like, I'm not using my mortgage payment money to play with the stock market. No, I'm using this $500 that I set aside that is not earmarked for anything. I'm using, if I lose that, it doesn't break me, but I'm going to use that to kind of learn about the market by, buying a share here and there. Yeah, I think that's a good way to approach it. So, all right, this was a great
Yeah.
talk.
Good
Yeah.
talk, all right? I'm glad. I hope I was able to provide some information that that can help the listener.
Well, yeah. Well, the point of this talk was not necessarily to help the listener in any particular. I
Sure, it
just
is. Yeah, well, just to talk, right?
it's a
That'll
talk,
help.
and if somebody gets something out of it, that's great.
Great.
But I mean, I did want to just kind of talk about what happened with Gamestonk as a way of understanding what happened. And yes, it is for educational purpose, because I certainly learned, you know. Have a deeper understanding now in terms of what happened. It is a fascinating case. All the different components, all the different levels, and all the different players that contributed to what happened. But
Absolutely.
anyway,
I mean, this is
yeah.
something that we all can learn. I mean, I learned from it too. It's like this how things works. It's just like one thing that my old boss told me, that you sometimes you just don't know how high something goes. Just like you thought that's not can't go any higher, and just keep going higher. And that's true for the market too. No, I don't think I don't think many people thought the market will be where it is today. When you look back a year ago at the start of COVID, it's like, oh, this market is tanking. Oh, this is bad. This is bad. Next thing you know, the market is all-time high a year from now. I'm just like, who would have
all
thought,
all time high. Yeah, and
right?
some of these prices, there was a couple of stocks that was watching very carefully, Tesla and Apple, um, and and Apple went up. In terms of proportion, it didn't go up as much as Tesla, but Tesla was like ridiculous, and I really didn't understand why it went up. So it was like over 2,000 before it split. It was like 2,500 almost, I think.
Yeah. So if you look at
Yeah.
Tesla, I'm just looking back at the prices, right? So this is split adjusted, right? So in December 31st, 2019 is $85, and then Tesla split 4 for 1, a 5 for 1.
Five
So
for
so
one.
those so that means it's around whatever 450 ish, 425 at the start of the year. One up to 1,000 in February, then COVID hit, and then I think went back down to 350,
Yeah.
and now it's 8,500 after split, which means it's now at 4,200.
something like that. Yeah,
Yeah,
yeah. Which
yeah.
is, well, just before it split at the end of I think was it August. It
It
went
was
as
around 1500, 2000 or something. Yeah,
no, no, it was above, definitely above 2000 because after split it was like four something.
yeah.
So it was above 2000, almost 2500, or like maybe 2200, or it was, yeah, it was kind of ridiculous. And it went up, yeah, really very quickly. But anyway, yeah, crazy time. And you're
It
right.
is
This is
crazy
this
times.
is exciting. Like the more I look into it, actually sometimes I get a headache because like there's so many different things that you have to learn about it. But you know what? The basic principle still holds. Buy low, sell high.
It's just as simple as that. That's all you have to do. Buy low and sell high, and you will never lose.
You'll never lose. Okay, on that note, I hope everybody wins here.
Exactly.
And so educate yourself, be smart, be responsible, and maybe, take all the hype with a grain of salt. And thank you so much for Steve.
No, thank
For
you for having here.
Yeah, this was very, very enlightening. Thank you so much.
Thank you.
Okay, bye everyone.
Bye, everyone.